Well, the July inflation report for the U.S. showed a slight uptick, climbing to 3.2% for that headline annualized rate, up from 3% in June. But core inflation, that inched downward from 4.8% to 4.7%. The U.S. Fed will have another CPI report for August to look at before its next rate meeting. For more perspective on the U.S. economy in the context of today's report, joining us now is Sonia Meskin, head of U.S. macro at BNY Mellon Investment Management. She was also previously a senior analyst at the New York Fed. Thanks so much for joining us today.
Thank you for having me.
So what do you make of this, uptick that we saw in the headline inflation rate? I know that there is always more of a focus on the core, but just to get the headline out of the way, this is somewhat expected, right? This isn't going to be a straight line down for inflation.
Sure. And I do think that it's important for the consumer part of the economy to watch what's going on with the headline inflation. It's important both for disposable income growth. So, of course, the U.S. consumer is quite sensitive to gasoline prices, for example. Grocery prices have also gone up. And I think that may actually spill into the fall as well. But, of course, the Fed is more focused right now on core inflation.
Right. OK, so seeing that come down a bit, I mean, it really just a hair lower at that 4.7% on the annual rate in any case. But the month increase coming in at 0.2%, what should we be focused on the most there? The monthly increase?
Well, so it's encouraging news on the monthly trajectory, and it's roughly consistent with all the adjustments between the different indices, et cetera. It's roughly consistent with finally 2% core PCE inflation that they're looking for. But it's only 2 months. And it's entirely possible, given the strength of the consumer, the strength of the labor market, still very, very healthy credit scores despite rising, I think, expectations even for rising delinquencies further in the fall. But so far, the consumer has been incredibly strong. The labor market remains strong. So there's this still upside tailwind, if you will, for core services inflation. We saw some fairly notable deceleration in the some of the sort of airfares, hospitality, et cetera. But that needs to be sustained for, I think, a few months at least for the Fed to really believe that a trend is taking hold that they want to see with core services.
Yeah, well, how do you see the trajectory for core inflation from here? I mean, still being above 4% at this point, it is quite a ways from the Fed's target. How do you see it easing from here? Is it going to be a slog?
I think it's more likely to be a slog than not, but the Fed has also said that they're willing to be patient with it as long as the trajectory is in the direction that they want to see. I'm a little bit skeptical that they would be as optimistic as market participants currently appear to be if, the labor market remains strong and wage growth remains strong. We've seen some deceleration in the Atlanta Fed and the ECI indices recently. I think that's very, very welcome news for the Federal Reserve, but it might not be enough for them just yet. To really kind of take confidence in the trends we've seen in the super core, if you will.
So what do you make, perhaps, Sonia, of the market reaction today? Because, I mean, just looking at equity markets and whether investors are, down with taking some risk, we did see a bit of that this morning following this data release, but it seemed to be pared back later in the afternoon. Any, idea or, a sense of how we should interpret it?
Sure. And I think, the market might not be exclusively reacting to the CPI release. We also had an auction, the 30-year auction that, some interpret the statistics to be a little bit weaker than in the previous auctions. And coupled with the, increased coupon sizes and the fiscal sustainability concerns of the U.S. sovereign, this could be something that's driving the market as well. But I do think there's been quite a bit of optimism around the disinflation story recently that may be a little too optimistic as we head into the second half of the year.
And what about the Fed come September? What do you think the Fed will choose to do? I mean, I know that there is going to be more data between now and then, but are you leaning towards the possibility of a pause at this point?
I think they may be considering hiking in November rather than in September. I think this latest data does give them some support in that respect. But I would be a bit surprised if they don't hike at all anymore this year, given that the summary of the economic projections in June suggested at the time, as of June, 2 more hikes. So we only got one so far. So I think they may be more likely than not to still hike again.
Still hike again, and do you think that that would be potentially the last one, or how much further do you think the Fed may have to go?
It could be, but a lot of it depends on the conditions in the labor market and services inflation.